Okay, perfect. You should be able to hear me. Okay, what do I? Perfect. We're going to start in 5 minutes. I'm just going to share it. Okay, perfect. That's it. I'm sharing the link. So we're going to be live properly in a few moments. Okay, create. Perfect. Now I'm going to share this on X. Okay. Mark. Okay, perfect. Give me a second, guys. Okay. Okay, perfect, guys. Sorry. Okay, let me see if there's anybody already here. Okay, I think there's 2 guys. Perfect. So now I already post this on X. Okay. Perfect. So yeah, I'm going to be live for roughly around 30 minutes. This is not going to be a really long stream. The reality is that there isn't too much things to cover right now. I mean, as you can see, market is a bit slow. We've been basically ranging for how much? For like 4 days. Okay, here you can see. I mean, this is pretty much like the price action from the last days. We had this nice impulse to the upside. Now we're ranging, and we basically had like the manipulation already to these hikes at one of the key point of interest that I was watching. I'm expecting now price to drop, but that's basically what we're going to be covering. Okay, not this low. But yeah, let's start. Okay, guys. So first of all, okay, let's keep the monthly here open it. I mean, I always start my analysis on the monthly. As you know, I mean, I'm still considering that the overall structure is bullish. We had one sweep, which was this one. We had another one, which was this one. And we created now this type of pattern that is pretty much like a tree drive here. And I'm still expecting higher prices based on the candle closures. As you can see, I mean, we've been still holding the 50% of the monthly CE. Perfect. And we are still trading at equilibrium of the range, which is the 50%. I mean, I think the bias on the monthly is pretty clean, and I'm targeting this previous month hike, or eventually if we can finally break from this all-time high. Okay, these are pretty much the ultimate draw liquidities that I'm following on the monthly. Now, this doesn't mean that I'm going to be longing just randomly here. I mean, I need some daily structure to confirm, for example, that the movement is going to happen. Similar to Ethereum, I mentioned it. I was already on a long trade before, which I got stopped out. And I mentioned it. I mean, if my trade gets stopped out, Ethereum is basically going to drop how much? Like 20-50%? Yeah, we'll drop 27%, which makes now a great moment to buy altcoins. A lot of altcoins are on extremely deep discount. Ethereum was the only trade that I was holding related to pairs that are not Bitcoin. Let me check if everything is working. Okay, yeah, everything is working fine. And give me a moment, guys. I got a message. I'm going to check my messages later. Okay. So, let's continue. So basically, I was mentioning, sorry, here, Ethereum had this 2 years range, which basically, I wouldn't say it's breaking now, but it's at least having a really big deviation. This was the last internal range security from the range that we had here, from the last monthly impulse. At this moment, I'm not interested in Ethereum anymore right now. And perfect. And just like I mentioned it before, I mean, we were going to shift the structure at this monthly point of interest once we shifted this daily OV. We never did it, so of course we never shift structure. We simply just created, a higher low at the OT. So basically for Bitcoin, it's no different. I mean, now we have this monthly point of interest, which is basically this one. And you can see here, I mean, this is the last OB that we had. We shifted the structure here, and now I'm considering that the structure on the daily is aligned with the monthly. Now, again, this doesn't mean that I'm going to be longing randomly here. I need some type of discount, ideally, if I want to enter, to a position. Okay, let me erase all this draw. Okay, this one not, because this is pretty much like the target. But anyway, so now that we are in a monthly point of interest and that we shifted the daily structure, what I do simply just plot my OT range, which is basically this one, and I check, for example, the weekly. Do we have any type of point of interest here on the weekly? Okay, let's see, for example, previous week we closed at bullish also. I mean, we basically cleaned 2 weekly lows, which was this one and this one. We closed at bullish. We printed some decent amount of volume on this candle, so we can expect this candle to hold. And it seems like we're doing a rotation from this previous week low to this previous week high. At least you can see we have equal highs here. And in the meantime, for internal retracement, for example, what do we have here? Okay, we have here previous week low, high. This is just, let's say, target. Okay, this is one of the targets. This is another of the targets. And previous week low. Okay. I think this is here like this. But anyway, let's now move to the H4. Okay, so what do we have here? So we have this as our first target. Okay, we had here previous week high, perfect. And as you can see here, the previous week low is basically the protected low. So I'm not expecting price to give me the full rotation, just a discount around equilibrium, which is basically equilibrium of the OT. I mean, it's pretty much the same. And perfect. So again, you plot OT from here to here, and it give you this level. So what do we have here? We have this H4 for value gap, which is a nice key point of interest. We have this swing low, which is another key point of interest. And these are pretty much the main 2 points that I'm going to be using for my analysis. If we plot, for example, and let me see if I can find, okay, this one, okay. These are the statistics for the week, which is basically it just plot like where are we likely to put in a high or a low on weekly graphics based on the last 26 weeks. So based on the price action from the last 26, the normal, the limit for the expansion to the downside should be within this area, which makes sense based on our analysis. I mean, you can see here, it's pretty much where we have the fair value gap and where we have this weekly swing, okay? So okay, let me raise this, just to make it a bit clearer. So anywhere between this point and this point for me is pretty much looking for longs. I mean, you could even set, for example, this limit rate, and this is still valid. I mean, we haven't finished the week. If for any reason we get a nasty drop, I'm going to be looking to knife catch it here with a stop loss here, okay, which is basically at this demand block. And I'm not expecting price to give us like a really big retracement. And my last line in the sand within this zone would be just like fulfilling this H4 gap, okay? So just to make it clean, again, this is the point of interest that I'm watching for this week. The other one is pretty much, these hikes. I mean, what type of conditions do we have here, right? Is always a question that I ask myself. And I think it's easier for majority of you to spot that we are basically trading on a range. It's pretty much like a 3-month range, I think. And perfect 2-month range here. So when we plot the value areas, just to see, for example, where are we right now, we can see that we have value area high here, value area low here. Okay, let me put this with a different color, maybe here in gray, and that we are trading right now at the point of control. Okay, I think it makes sense that we're trading right now at the point of control, and the prices are extremely choppy like this. So I mean, you could simply just avoid trading until we, for example, take one of the edges of the value area. I mean, you could avoid trading, or you could simply be scalping here, but be careful. I mean, price is a bit nasty on lower time frames. Okay, so for the hikes, I mean, you can see that the weekly expected, for example, zone for a possible hike is basically lagging it with the statistics. So, okay, just give me a moment. Okay, so basically I'm expecting price to play this deviation. Okay, I already put in this on the weekly outlook that I shared inside the lab at the start of the week, and I've been simply just following the plan. Okay, sorry. And this is where we could see another retracement, maybe for scalp, or a possible breakout. Okay, if we get a breakout here from this value area, I'm going to be targeting this previous month height. I mean, what happened when price, for example, get an accumulation, manipulation, and then big movement, okay? This is the same on lower time frame and the same on high time frame. Here, for example, accumulation. I don't know if we had, for example, some manipulation on the correlated pair, which was Ethereum, but anyway, accumulation and then expansion. Once we finish this accumulation, which I'm expecting this to be soon, we should either break to one side or another. I mean, we are either going to break out from here or we're going to break out from here. And if for some reason we take these lows, I'm still going to be looking for longs. Why? Because at the end, I mean, my bias is still bullish on the monthly. And if I get some lower time frame shift after the rate, for me, that's still a valid long, okay? At the end, we are still on the context within this major VBG. So any fulfill would still be a valid trade. Okay, so yeah, this is pretty much, guys, the outlook. Give me a moment. And let me check. Holding short, Bitcoin. Hey man, how are you doing? Holding your short, Bitcoin. Which short? Because I don't remember. Okay, you mean the one from yesterday, right? I closed at break even. I closed at this break even. The position. I think I didn't update this like on the Telegram. But anyway, why I closed it break even? Because it's choppy the price. I mean, you can keep it open. It's not about trade, and it's actually still a bit below my entry. I think my entry was 680, something like this. It's pretty much at my entry, or it was. Let me check because I don't remember. 663. It's exactly at my entry right now. But anyway, I closed it. Why? Because the price is choppy. I don't want to lose money here. I mean, remember, we're at the point of control of a major composite, of a major value. So I don't want to lose any money here. Especially now that I feel a bit more in sync with the market. I mean, I had a rough month last month. This one is getting better and better. So I want to be careful with my positions. And I don't have enough confidence that we are going to respect this hike, okay? Even though, this was a pivot that was built after we put in, after we put in the lower hike after the manipulation to the previous week high, which is the only key point of interest that we've tapped so far. I mean, we have more liquidity to the downside than to the upside. I mean, check this. How much lows do we have here? 1, 2, 3, 4, 5. I mean, we have 5 equal lows that we haven't rated. So yeah, I mean, my bias is still to the downside. I think this is the protected high, but I don't know if this specific high is going to be held. Why? Because at the end in low time frame, we are also on rotational environment. I mean, you can see, for example, if we plot again, let's say a daily. Here, if we plot a daily, you're going to see how much days of composite value we have. 1, 2, 3, 4, 5, 6 days right now. So this is pretty much the low time frame outlook. Now, I don't know if this specific point of interest is going to be respected. I hope it is respected, but I would feel more comfortable, I think, holding, for example, a trade with a wide stop loss. So maybe, for example, this is something you could do. If you are in the trade still, which again is at entry, a bit below entry, you would simply adjust your position and get something like this for 2 units. I think this is way better. And yeah, I mean, you're gonna sleep in peace for the rest of the day, because I wasn't able to sleep yesterday with the position open, so I just closed it. I wasn't feeling comfortable holding it like with the stop loss, because at the end, you know, in New York we often get like these peaks of volatility here, and this one was quite low, not a really big movement, just like a sweep to the downside, now to the upside. But anyway, yeah, this is pretty much like the position. But in general, again, we should reject, okay, from this area. So even if you're holding trade with this stop loss, we should reject this zone, and that would be ideal. But I mean, market is crazy, so yeah, I think it's better to be safe with a bit of wider stop loss if you want to trade this type of price action, not get stop out in the middle of the value areas. So yeah, let me move. Okay, but anyway, another, for example, trade that I'm eyeing would be pretty much that if we take this hike here, and that we tap into the OT of the range. I mean, because at the end, this is a protected hike. It took high time for liquidity, which was previous week high, into an H4 fulfill. Here you can see. So anything within this zone could be a nice short on confirmations. For me, what are confirmations? Okay, when I mean confirmation, I mean something, for example, like, okay, let me see if I can find it. Let me see. I want to look at crypto. Yeah, I mean, indexes are cleaner, man. Way cleaner. Actually, I have an account right now that I'm able to finish on Apex. And yeah, I mean, I've been feeling pretty much the same way. Like, equities in general have been way cleaner. But, for example, and I'm going to show you something interesting, sorry. Let me see if I can find it. Because what I've been doing is that now I'm only trading at a specific candle closures and opening for crypto, okay? This is not for equities. Why? I mean, basically just to have more time to trade equities. And it's pretty much what I've been mentioning at the lab. I'm mixing the fractal model with relative volume and low time frame shift in structure. So for example, I determine point of interest, just like these ones. Let me erase this. So let's say I have this point of interest, or this one. I mean, it doesn't matter. It can be anything. So once I have a point of interest, perfect. Something like this, like these boxes. Let me see if I can find. I don't have a group for boxes, but anyway, once I have boxes like this one on high time frame or low time frame, I simply, okay, let me see if this one, if this can finish downloading. Fuck, I don't remember where is my. Okay, let me check. Maybe on the Black Edition. I don't know if it's my internet or why this is taking such a long time. Is my internet working? Okay, give me a moment, guys. Because I want to check if my internet is working or. I mean, if you can hear me, it should be working. That's pretty much what I was checking. Okay. Okay, anyway, I'm simply just going to show it with give me a second. Yeah, it's working. I mean, yeah, it's working. Okay, I'm going to show it with a different chart. Okay, let's show it here. Let me raise here all the draws that I have, and let me put it with volume suite. And let's write this one. Okay, no, actually I want to keep this one. It could be useful to highlight what I want to mention. And let's put, for example, okay, this is the clean one. And basically color candles, okay? Okay, perfect. So basically what I'm doing is that, for example, let's say I have this as point of interest, right? And for this, actually, I think it's going to be useful. Okay, let me raise this. Okay, let me go to the lab. Let me download my weekly outlook. So, okay, what I'm doing is basically, okay, I'm writing these weekly outlooks, and now the cover is finally finished. This is the structure of the report. This is, for example, the high time frame structure. So first of all, I determine my monthly bias. I do all these during the weekend. The pivots that I want to be trading, for example, just like I did here. I mean, you see, I was targeting one of these pivots to look for a possible reversal. One of the pivots was this one. We tap it, okay? That's something important. And these are the key sweep points we should monitor for short or longs, okay? This one, equilibrium, and this one. Perfect. Volume analysis, sorry, here. Okay, perfect. This is the volume analysis actually. This is what you like, the explanation of how to merge the composites. And previous mo low, previous mi hike. The plans, sweep here, mark structure, break long. Sweep here, long. Sweep here, short. Breakout, looking for scalps. But this is not what I want to show, okay? What I want to show is, for example, this, okay? If I have a low time frame bias, like taking one of the three key points that we have around, and what I'm looking during New York sessions is basically, and for example, this was the outlook. What I'm looking, I mean, this is the same swing point. What I'm looking during New York sessions is to build these fractal models. For example, to put in a short-term hike like this one and rate it during the key time. I enter on H1 volume, and if I have, for example, some H1 pivot with an H4 pivot here, and I rate the two into a high time frame level, for example, like this one, okay, in a rotational environment, I mean, at the end, this is a rotational environment, my confirmation to go short is basically this relative volume candle. And I can simply, for example, enter at the close of the candle with stop loss here and just take profit here, which actually this was one of the trades that I took at the lab. I think I got an entry around here, and I closed my trade for 2 units. This was pretty much one of the few trades that I've taken this week. And this is extremely simple and easy. Why? Because at the end, I mean, these are fractal models. You can see here, hike, get taken into a high time frame level. We close below previous H1 candle. And you simply enter here. And if the hike was built during the key times, which are basically the ones that we have here, between 8 and 40 UTC, that's pretty much your trigger to go short. And this works for pretty much everything. I mean, here, for example, I had a point of interest. I was looking for short here. So what's the confirmation for me to go short? I mean, it's extremely easy. I simply, for example, set an alarm for the OTE. For example, this was my point of interest the other day. Okay, I was looking to add at the OTE. Why? Because this is now the protected hike. So any retracement for me was pretty easy still a sell. And what happened? That we tap into the OTE here. Okay. And we rejected when we put in and you can see it's interesting. When we put in the relative volume on the H4 and we rate it again, and also happened it on the H1, I mean, this was the first early sign that we were likely to retrace. Price was showing bearish price action, which is engulfing candles on the H1. But I mentioned it, we haven't put in the H4 swing. We put in the H4 swing, we rated this, and there are multiple ways you can enter. You can enter, for example, one price sweeps and lost again this level, and put the stop loss here. This is one of the ways you can enter. Or you can basically enter, if you have the H4 and the H1 aligned, you can enter like this one. I mean, you can look, for example, for low time frame shift, and once you get your shift, for example, like here, you can put your limit. I mean, there are multiple ways you can enter. This is pretty much literally just fractal models. And the same things you apply, for example, to the fractal model, you apply it here because at the end it's a fractal model at a key point of interest. It's exactly the same way to trade it, but extrapolated to crypto. The only main difference, for example, here is that you are entering on a specific key window, and which is basically the one that I show you right now. And actually, I mean, that's not an actual difference, because even on the fractal model, you enter on a specific key times. So yeah, it's pretty much the same type of way to trade. I mean, for example, here, I mean, if you get, for example, an H1 rate into a value RLO of a composite, I mean, for example, okay, this one, not the cleanest example, but anyway, I mean, and you see the relative volume on the M5, this is an early sign that we're likely to go higher. And if you get maybe some shift, that's your confirmation. Personally, I'm not doing this on the M5. I'm doing this on the H1 and H4 for intraday trades. That's also why, for example, I'm trading more these days, because I changed my style from scalping to swings. The first month of this year, sadly, market is not for swings right now, so I had to shift it now again to intraday and scalping. And yeah, I mean, you see that majority of the hikes always get built during these key times. For example, here we put in a relative volume pivot, we rate it, we reverse. And some more examples. For example, here, I mean, of course, you want to check that this is happening at the key times and not just randomly. Key volume here, okay, key volume rate. Red. I mean, there are multiple ways. For example, here, but this was a strong hike actually. And let's look more for something like this. For example, here we close below and we actually end up retracing, not the cleanest one. And here, for example, okay, we didn't close it above the rate. On this one we did, and we put it the reversal. If you want to pair this again with key levels, it doesn't make sense if you just see relative volume in long. For example, I don't know if we have some type of H4 fair value gap here. Maybe we do. Actually, I'm already on the H4. Oh, actually, we do have the... I didn't show it. The H4 FIBG. So this is similar, for example, to what I'm looking here at this H4. If I see some H1 relative volume being printed, for me, it's extremely easy. I'm simply just enter at the close with the stop loss at the validation, okay? Same here, for example. I mean, the idea, sorry, is that this happens during key times, okay? But majority of the highs and lows get built basically like this. When you tap a high time frame level, you put in, for example, a pivot like this one, and then you rate it with high volume. For example, here, and 18. Okay, I'm on the H4, sorry guys. Anyway, I mean, it's the same. I mean, you get the idea, but I was on the wrong time frame. But yeah, I mean, yeah, on the H1 is way cleaner. On the H4 is stronger, because if you pair it with weekly levels, I mean, that's basically just like a whole model. But yeah, I mean, you get the idea. It's the same on lower time frame. Yeah, okay, let me read it. It's running slow. CFT. Okay, we are going to consider this, man, actually, like for real, consider it. I'm going to discuss it with the team, because actually you've been pretty much the most active one during the streams. So I'm going to ask him for how many accounts am I able to give and what size of account. Maybe we can get you a 100k. I'm going to request it and let's see. But yeah, I mean, but on the H1, okay, what I wanted to show is that on the H1, this is way cleaner. I mean, you can see on the H1, I mean, you literally get almost all the retracement on high volume, almost all the retracement. I mean, The H1 is because it's within the sessions. So of course, I mean, this shows way cleaner. For example, you see 9, relative volume here also. Of course, you want to trade to the side where your high time frame bias is. And yeah, I need to get a new MacBook. I think this one I'm just going to get rid of it because it's getting lower. It's getting lower these days. And what else? I mean, in general, when you see relative volume on the H1, I mean, that's pretty much an early sign that we're likely to trade higher or lower, or that it's fueled, for example, to one side of the market. It depends on the context. It depends on the context. For example, let me check. Let me see if I can find this, because I think this is going to be a nice example. Okay, let me fractals. Okay, absorption setups. You can see here. These are some of the setups that I like to play. Weekly narrative, H4 swing resting, H4 high volume swing. This is exactly the same type of trade. Okay, you can see here previous week low, weekly gap narrative, H4, and we start building here relative volume. Once we do it and shift the structure on the M15, for example, like a fractal model, you can enter long. We used to play a lot of these setups live, all last year actually. This is how it looks on footprints, and this is the same on the H1. Initial short-term hikes, price deviate from a value area, range, or just for example tapping into a point of interest, close below on high volume like this one, and that's your trigger to go short. For example, like this one, you see we have this swing resting at the value area. We put in this H1 key time, and once we get the rate, that's your first trigger. And we here, stop loss here, targeting, I don't know, 2 units, 3 units, it depends. Same here, hike, absorption, low, daily FBG. We put in H1 relative volume here, we rate it, and we reclaim. I mean, this is pretty much the fractal model that I like to play. On cryptos, I think this is way better. And if you pair this with the Monday opening range, I mean, that's just like free money. But anyway, I'm going to show this later. These are just personal notes. But yeah. Yeah, this is exactly like a simplified version of order flow. Because at the end, you don't need extra chart with this really. Why? Because if you have a point of interest, for example, I mean, and you can see this clearly on examples on the lab. If you have a clean point of interest, for example, okay, like this one, let's say, okay, you have this high, okay, we are in rotational environment. You know that we are likely to trade lower because the drawn liquidity is lower still, which is our long point of interest. And you see something like this, and you don't need to go to footprints to see that this is a P-shaped profile and that we have excess at the hikes or delta. I mean, open interest, I mean, at the end that doesn't really matter. What it matters is volume and structure and the narrative. And with the structure, with the narrative and with the volume, you can pretty much do the inference that we are likely to go lower. I mean, it's obvious that we're going to have here pretty much some type of P profile, and it's obvious that we're going to have let's call it a profit traders on the hikes. I mean, it's extremely obvious. When you get a manipulation, let's say at 9:30 or to the opposite side of your draw, and this is just a clear, for example, simplified way to see it. And yeah, I mean, you simply enter, for example, on some low time frame retracement. It could be OTE of the candle, and you can see, I mean, yeah, same, for example, here we put in relative volume pivot. Okay, we rest for some hours, short hike, we rate it, and this is your sign to enter. You can enter here but you don't want to put your stop loss here because it could be rated. You want to put your stop loss on the actual invalidation. If your point of interest is here and the invalidation is some week here, then you put it on the week. You just simply enter a bit earlier. But these are early signs of big movements, which are often retracement if your draw liquidity is correct. Same here. I mean, when you get, for example, a short and low, let's say you have a point of interest resting here. Once you get that, you can simply put enter here, stop loss here, and target, I don't know, something higher. If you're expecting, I don't know, for any reason, higher prices. Or here, for example, we already seem to be inversing the bearish price action. You see this H1 swing, FBG, high volume pivot. We rate them, one side, another. But I don't know if on lower time frame there was some confirmation here or here. I mean, we would have to check. But anyway, I mean, this is just like some examples. Let me see if I can find some other example. Okay, for example, this was one of the trades that I was looking to play the other day. Oh, actually, I played this the other day. Okay, we were putting M5 relative volume at the H1 point of interest. So I was simply just looking. Let me see, because I don't remember. Okay, I don't remember. But anyway, I was looking for this swing on the M5 now. Yeah, this one. And we put in M15 relative volume, but I didn't got the feel. But anyway, I mean, these are simply just early signs that market is likely to reverse. When you start seeing this relative volume at the pivot, and you see price inversing bearish structure, for example, like a FBG, on Excel chart, that basically looks like the imbalances. I don't remember the name, but those like imbalances that candles put in when one side is overwhelming the other. When we inverse those imbalances, which are the FBGs, then you start seeing some strange shift in the structure and often the reversals. Okay, and you can see here, I mean, this is the clean example again. H1 relative volume retracement, H1 relative volume retracement, H1 relative volume retracement to the upside, H1 relative volume retracement. This always at key times. Okay, if it's not happening on a key time, you don't want to trade. And you could ask me, okay, why, for example, I trade it to the downside and no to the upside? Because it depends on the narrative. If you have a bearish bias, you want to play this to the downside. If you have a bullish bias, you want to play this to the upside. I mean, that's pretty much the only hard criteria for this type of entries. Because at the end, it doesn't have anything hard, anything really. But anyway, these are, for example, this is how I'm entering to the trades, and it's easy. Why? Because at the end, you only have to put in alarms every 1 hour. You literally just put an alarm every 1 hour during how much this window lasts. I played from 8. Okay, sorry. I played this from 8 UTC 4. Okay, to. Okay, why this is not like showing? Like, oh, anyway, I think it's easier if I show it with time, key time. Windows. Let me see if I can find this on my X. Key window. Okay, now let me go to Adez. Yeah, Adez XBT time window. Okay, this was the one that I'm looking for. But anyway, I mean, you can see this based on historical data that you can extract from TradingView. Majority of the hikes and bottoms of the day get formed within these key times. Okay, hike of the day, low of the day, hike of the day, and this one was not like the cleanest one, but anyway, it still formed the hike of the day. Hike of the day formed here, and low of the day formed here. Of course, you need the narrative. You don't want to use this by itself, just randomly. And yeah, I mean, you simply just put an alarm at 8, at 9, at 10, at 11, at 12, 13, 14. How many alarms are those? Like 6? And literally, when your alarm sound, okay, of course, you have to determine some point of interest. Let's say my point of interest is this one, okay? So if my point of interest is this one, I want to keep eyes. Or for example, this one, I don't know. I want to keep eyes here. I want to set an alarm here, in here. And I want to see how the H1 or the M30, it could be even, is building when we are approaching to this pivot. If I see some type of relative volume getting built, some short-term hike being put in, and I see price rating it again and closing below it, then I can enter, for example, to a short. And yeah, that's pretty much how it works. It's extremely easy. It's extremely simplified version of just footprints, texture charts, fractals, and you only need 6 alarms. And of course, the alarms at the H4, because if you pair this with H4 swings, I mean, you are set. For example, H4 swings, I mean, these ones, not like the actual overall. Okay, okay, let's see. I think it should be working. Okay, perfect. Okay, Yeti Nano. Okay, it should be working out. Sorry guys, apologies. Go, I guess. Yeah, perfect. Okay, so yeah, I was mentioning that basically this mix of a fractal model with relative volume and with what else? Fractal model, relative volume. And okay, yeah, and confluences, for example, like RSI. I was showing the example with this one. are, I would say, the strongest strongest confirmations you can get. For example, I mean something like this, daily relative volume. For example, we put in here. I mean, this is another example, and you can see this way cleaner on the daily, way cleaner. I don't know why I didn't show the example with the daily pivots like this one are extremely high probability trades if you get them on a weekly or monthly level. I mean, this is exactly the same fractal model. Of course, you want the week to be tapping into some level. But when you get relative volume time sweep with relative volume, no, this is crazy. It's literally crazy. Sorry. Here. We rated, we had a small upside. Then, okay, we took the hikes. Then we rated this pivot. Here the same. Okay, something important. You want to consider again any bearish FBG. And again, I mean, this is not magic. You want to pair this with key levels, which could be, for example, value areas. If this is not happening on some key level, okay, value areas pair it with liquidity. Okay, just so it's so it makes sense. I think I have a post on X literally explaining this. If you're going to use it on the daily, you want to pair this with liquidity on the daily, and not just the value areas. I mean, that's one of the reasons why, for example, I don't plot too often the volume profiles, because I mean, I don't need to see it. Because in general, sorry, I just use the liquidity. And for example, if we have some monthly pivot here, like we had there, you can see here, monthly FBG here, previous month low. You had something like that, and you get a short-term low with relative volume being rated. I mean, that's just huge. Yeah, that's huge. And you can see here we put in relative volume pivot also. Yeah, but yeah, I mean, majority of the hikes and lows get built during relative volume. You can see here, here, and here. Not the cleanest example. I mean, one of the ways to know, for example, if the profile is a V or P shape is on the form. If you have something like this is not how a reversal looks. Okay, this is not how a reversal looks. It often have more wick like this one or this one, and it's always at a key point of interest. Here it was at the breaker, sorry, at the rejection block, and this was at the range lows of all this range. Same here. And for example, this one, I don't know if this one was on a key point of interest, but anyway, this always offer good scalps, good intraday, and often high time frame reversals. For example, this one, I think this is clear fuel to the downside. If you see this profile, it's likely just going to look, for example, like a P profile, something like this, and this could offer, this verbal gap could offer continuation. Actually, it did offer, but later. Similar to some of the examples that I show here, where you form like a low time frame verbal gap and with relative volume, and it offer often continuation. For example, like this one. Okay. Anyway, this is pretty much like some few examples, and I just explained the reasons why I decided to close my trade, guys. I'm just going to be following now a simple plan, which is basically, I can rate this, which is just simply waiting for price to give me this daily swing. And once it gives me this daily swing, I'm going to be looking for shorts on these hikes, okay? Okay, yeah, it's still working. I'm going to look for shorts on these hikes, which is the last OB from the protected hike. I need confirmations, so confirmations are going to be either sheet or relative volume. If I don't get them, I'm not going to be shorting. Remember, we're still in a rotational environment, so any deviation to value area to the value area high, tapping this is a nice trade still, and we have a lot of liquidity resting here, so I think the draw liquidity is quite clear. Okay, I'm simply just going to be looking. Oh my god, sorry. I'm simply going to be looking for something like this. We could For example, he's here a bounce, maybe, I don't know. But in general, my ultimate point of interest, the high probability ones are here and here at the hikes, okay? At the equal hikes. Once we break from this composite, okay, we will see what we do then. So this is going to be all for the stream, guys, and thank you for joining, and we'll see you later, guys. Later. I'm going to check about the CFT account for the white wolf, which is the one active here, for a big one. So see you.